So today is a little different, or this video is a little different than before. Instead of looking at my ugly mug, you get to stare at my screen. So what I'm showing you here, last video we talked about having a brokerage account. I told you I used Charles Schwab, and that's what you see right here. And when I log in, it goes to my summary page, and it shows me my summary. It basically tells me from my portfolio that my investments are up $31.04, or 2.72%. Let's see. So so what do you get with your brokerage account? You get all kinds of neat things like balances. I can look at that if I want. Brokerage account, and this just shows you stuff that what I've done. Gives you the particulars on my positions. Shows you some of the stocks that I've purchased. Now we're going to be looking at these on another screen soon, and I'll show you and explain that to you. But anyhow, just to give you a quick little familiarization. So these are 3 stocks that I have purchased right now. I have EVRI, I have LADR, and MEGEF. And it shows you the quantities that I have. It shows you the price that they are right now. And then it shows the total market value for the quantities that I have. It shows you what my gains and losses would be if I were to trade them right now. Okay. Let's look at some other thing. My portfolio performance. I don't really know. I don't look at a lot of stuff I don't really use, to be honest with you. But it's here, and I imagine most of these type of brokerage accounts are going to have all the same type of thing. This just shows you the asset allocation that I have, stuff that probably doesn't really mean a whole lot to you. What I really wanted to show you here and why I use Schwab is for the research. And so, like we talked before, you got stocks, you got mutual funds, there's bonds, there's some information on markets, stuff you can read about. And anyhow, I'm going to use the ETF, Electronically Traded Funds Screener. Okay. And they got different filters, if you would, for ways that you can screen and look at performance. What I've used here is under the price performance, and they have the 52-week high and low. So I used the percentage below the 52-week high, and I can go click on that, and as you see, they have some different things already set up, so you really don't have to do a lot if you don't want to. For example, if you want to see something, 52-week high, just to recap, that in the last 12 months, this is the 52-week high is the highest that the stock is traded for, or the ETF's traded for, and the 52-week low is the lowest. So this is saying that if I click on this, okay, it tells me there's 19 right now that are greater than 80% below the 52-week high. If you remember, we were trying to find something, a security that's down around that 1/4 range. So this would be a good way to do that. And view matches. And then here's a whole bunch of information on different ETFs. Over here, it shows you the percentage from the 52-week high. You can click on that, so you can sort these by the highest or the lowest. Anyhow, what I want to look at is there was one nail. Now This is one I actually put in my watch list, and I'll show you this in a few minutes why. But all right, if I click on that highlight, it brings me to their screen, and you'll notice that this is on a 1-day screen. So in other words, this chart is just for today. If I click here, it's a 5-day, a 1 month, a 3 month, and a 6 month. One of the things I like to use is between the 6 month and the 1 year. And the reason I'm doing that is, in looking over the year, right, you don't have to be a genius to see that it looks like, even in a worst case scenario, when things are normal, okay, that this ETF is trading for around, I'd say 42 to maybe 50 range. And right now, today, it's selling for $16.05. So if you do the math, if you buy it at $16.05, if it goes back up to, say, we'll say 50, just to round it off. Hold on, I got my little calculator here. I don't trust my brain anymore when I do this stuff. So, looking at the calculator, if I say, what do we say, 50 minus the, hold on, 50 minus 1605, that's 33.95. So if I take that and divide that by the 16.05, so we're talking about 5 times that it may possibly increase if it tracks back and trends towards the 52-week high. If that doesn't make sense, give it a few minutes, maybe it will. So one of the things, when you look at a chart like this, ask yourself the question, hey baby, cool. When you look at a chart like this, all right, if you look down here, it shows you the months. So what happened between, I'll say, February and March? This whole coronavirus thing kicked in. Now, here's the interesting thing when you're doing technical analysis, right? You notice I didn't go look to see what these people do. I didn't look to see, how's their management and how's their, profit to earnings ratio and all this kind of hoopla. I don't care. I can look at this chart and I can quickly determine, okay, the coronavirus caused this to drop down. In other words, they're gotten beat up because of the coronavirus. Chances are, when this coronavirus is over, it's going to go back up. Now, will it go back up to 50 a share? Will it go back up to 98? So if you look over here at this 52-week range, that's the 52-week high-low I was talking about. If it were to go back up to 98, you're talking multiplying factor very high. So in other words, another way of looking at this is if, let's use the ultimate high. So I take 98, 55, and then divide that by 16.5. So that's 6 times. So say you put $500 into this, and it goes up to that. You would take $500 and turn it into almost $3,100. It'd be $3,070. That's pretty good gain, and that could happen within a month, or maybe less, maybe a little more. But who cares? If you put $500 in that, and it took 3 months to go there, do you make $3,000 that quickly? And for that little bit of effort, basically it's a buy it, it's a hold it, wait till it goes up, get rid of it. So one of the things too that you'll learn to look at is, and we'll talk about a little more later, is you look for what they call the teacup. And what the teacup is you got to realize when this thing was going down, people started shorting it. And when you short any kind of entity like that, or security I should say, What happens is, and I'll have to explain shorting in more detail later, but the long story short is you and the brokerage are gambling against each other. If I were to be back in here, if I were to short this, I would have been gambling against the brokerage that I think it's going to go down, and they'd be gambling that they think it's going to go up. So what happens is I say, I want to own, say, 100 shares, but I'm not buying them right now. So the brokerage says, okay, you owe me 100 shares. If it goes up in value, I have to pay more and give that 100 shares back to them. So that's kind of how they would make money, right? Because I'd be buying them from them. If it goes down, and instead of me buying the shares, say, at 80, if I bought them at, say, 10, right, then I make the difference in profit. That's how you make money when you short. I'll go into more detail on that later. But anyhow, point being is, at some point, if I'm shorting this, sooner or later, I have to buy some shares to cover the short. And that causes this little teacup thing. Now, if it just kind of flatlines, chances are it may go down even more. But it's not really flatlining. It's looking like it's ready to head right on up. And that's a real good sign. So what this means is people covered their shorts, and now they're expecting it to go long. So if you're not doing the shorting, but you're looking to go long, now would be the time to consider buying it. I'm not telling you to buy this one in particular. I'm just showing you the shape of a chart and how it tells you a lot of information. The other thing you can do too is, well, let's look at the 3-year. 3 years a little funky looking, isn't it? And the 5, it looks like they've had some really good times, but still, it's proving out our theory that a 40 to maybe $45, $50 range is not unreasonable for this particular security. So that's one of the ways to look at it and one of the ways to analyze it. And so from there you can decide whether if you want to buy it. Some people buy a little bit and then they wait to see, does that continue going up? And if it breaks into a new high in 3 days, maybe buy some more, keeps going up, maybe buy some more. There's multiple ways to go about doing it. But the key is, if you bought this today at $16 a share, say you bought 1,000 shares, $16, and if it were to go up to 50, we'll say $50. So again, let me do my math here. So 5. So it would have gone up $33.95 per share. And if you bought 1,000 shares of that, you just made $33,950 profit. Money in your pocket, or